TGIF Warriors, how's everyone doing? Everyone feel refreshed after this week? Who's refreshed?
I feel like I've been like run over by a freight train, Dale. I don't know about you.
That's refreshing, isn't it?
I don't know if it's refreshing or not. Oh my God, it
Anyway,
feels like a
yeah,
truck hit me.
yeah. Well, that's why you have to be a warrior to do this. No one said it was going to be easy, and it's not. So, AJ, hope you had a good week. You too, Glenn, Bran, James, how you came in, riding the gold, Sinatra, AJ. All right. So maybe some people had a difficult week. It was a difficult market. I would say, though, that something that really was significant besides, what the Fed did was the turn in the end. Now, it might be failing here, but I don't think so. The irony is the Fed cuts by, you know, as much as the market hoped for, and yields and the yen are heading up. And I don't think this is it. I think there's a shot for 150, be about less than halfway back from the highs, and yields. People are going to wonder what's going on. We might even get a rally back to 4%. So we'll see. They're pretty much tied at the hip. Correlation seems pretty strong to me. I mean, do you see any difference in these charts? Pretty much the same picture. The other feature is WTI got right back to the breakdown here. So that's been a real nice trade. I still favor natural gas over it. And getting a pullback today in risk, but the melt up continues. Uh, Ryan, are you around? Who's around today?
I'm round. I'm very round, mate.
Okay. So, kind of a real whippy week in currencies. Um, what do you think? Just a continuation higher on, had a positive week. I see a little 3 here in cable. And this was pretty interesting. So I had this triangle line drawn for a while, and the Aussie has made a few attempts to try and get through. Here's a bigger picture on it. Let me be a major breakout if it doesn't. So you look at the weekly, and this ascending triangle can measure pretty big, right? So, it's from above 68, it's about 500, could take you up to 73. Next big test, if we break out, is the 200 week, but that has a bullish look to it. But you know what, guys? I can't rule out that we don't break out and we get one more retest back down here around these lows. So be careful with the yields and the short dollar position right here because, I'm not saying that we're going to fly, but it's possible we could still rally back to 102, and it's probably mainly because of yen strength. That's a nice looking week at major support. So let me
And
just
Dale, don't forget the B.O.J was last night. Ryan and
Oh,
K-Man both they talked about it on the it happened last night around
yeah,
it was about 8 o'clock our time
yeah.
Pacific. We were chatting about it in the chat room, but then the press conference really moved the yen after I went to bed, and I think K-Man and Ryan had a really nice discussion on the Flow show this morning about it. Maybe Ryan can fill you in there.
Okay, just technically, and then Ryan, I'm going to ask you about if the narrative, because of what the B.O.J said, could make the technical case happen. So, this may end up being a neckline of a head and shoulders stop. And, if we rally to 150, be kind of a weak right shoulder. And then under 140, this thing measures back down to 120.
Yeah, yeah.
Okay, right.
There's some big fibs. Sorry,
Where
mate. Yeah, there's some big fibs still there. 139, 140. So it's a big old area.
Yeah.
But as you can see, just from that 140 level ish, it's a big area. So there's two things going on. You asked at the start of the show,
Yeah.
can we continue? I think I have to refer to my old boring line, where we close the week is going to be important. We've got a lot of pairs and assets that have made moves, made breaks. Some of them not quite. Some of them trying to hold the breaks, like Aussie dollar. It's trying to stay above 68. Euro dollar couldn't get up to retest that 112. Cable's making a break, and then you got others who are just spinning on their arse, like dollar CAD, which is going nowhere. So yeah, there's a lot of nearlies, some breaks, but I think we're not out of the woods yet. This is still a bit of a market saying we're not too sure how to progress from this point. So if some of these breaks hold, like we're seeing in stocks and gold, all well and good, they kick on. But some things like the euro, like Aussie, they need a bit more. They need to do a bit more, like you showed with your pattern on the Aussie dollar and on your trend line there. But coming back to the B.O.J, we were sitting on the lows in dollar yen over the announcement and whatnot, and then
here probably
they were a little bit cautious. The statement was, okay, everything's going the way we want it to go, so everything's fine and dandy with rate hikes. That was all well and good. And then Ueda popped up, and he was just a bit more cautious than I was expecting him to be. We're not there yet. It may be some time before we hike rates again. A lot of caution that price pressures have eased because of FX moves. But he did acknowledge that the economy was still moving and things are still in line. But the market went, okay, we're not going to get a rate cut soon, so we're going to sell some yen. And that took it up towards the recent 143s, which we've been sitting around all September, as you can see there. And then a moment ago, we've had a break through 144, and off it goes again.
Yeah. Okay, well, remember Grega showed us how the COT setup was extreme. And the contouring move was what happened here.
And Grega happens to be here today.
Oh, yeah, nice. I'm glad I asked you about the yen earlier in the week, Grega. That was great. Great point you made with the COT.
Yeah, actually, I also posted a new blog post for some who want to read on our page on ForexAnalytix, just an hour or 2 hour back about the dollar yen. So I think that everything, I mean, as you said yourself, dollar index is at a very potential important support levels. We are not seeing breakdowns despite this cut from the Fed. Dollar yen is already turning. Maybe we get some retest of these lows once more, but I certainly think that during the month of October, we could see some higher degree corrections. And if we see, I think that 101.80, 102 is a pretty nice and strong new resistance for the dollar. But this has still not changed. I mean, the higher degree trends are still there. I just think it's a bit late regarding maybe some short-term shorts here on the dollar.
Okay, kind of with you. Do you think it would have enough juice to, I figure if we get up to 102 that they're going to want to, 102 will actually take out a lot of stops.
I think
they'll take the stops.
That's the previous fourth wave up there. Yes. So, I mean, if we see some recovery here and a reversal now on the dollar as well, in let's say next week, I think that dollar yen will be possibly the best play on the long side, especially if stocks will stay sideways somehow, or even because there's still a risk on pretty strong.
So I know that in the notes you had it in wave 5. Are you in agreement that the ironic part of the Fed going big put in a low in yields? Could we rally to 4% in the 10-year yield?
I'm looking like 3.9% for a wave 4 rally. And then the final sell-off down to April 2023 lows, which is 3.25%. So overall, after rallies, I would expect more weakness to show up, especially during elections. I think that these things will still become quite volatile, and possibly we will see more dollar weakness during this period.
Okay. Yeah, so basically what we're looking at is some counter trend stuff for a week or so and then revert back to trend.
Yeah, exactly.
Okay. Did you ever do any work in that gas, Greg? I saw it a few weeks ago. I know, it's a real volatile market, but
Yeah.
you have a view on it?
Uh, I mean, not really. Natural gas
Okay.
is it's really hard from a technical perspective, but if you zoom out and try to focus more on cycle patterns here, I just think that it's much more easier to catch the trend when we are much lower. But I think
Okay.
that we are sooner or later going to see a new shift there from from slightly lower levels. I
Okay.
think that cyclical are doing very good here on natural gas.
And WTI back to the breakdown. What do you think?
That's if you zoom this out a little bit, you will actually see that that's your triangle line, I believe, the blue one.
Yeah.
Yeah, so it's a pretty strong resistance. And by the way, dollar and crude oil, as you know, it they both moved to the downside together. And crude oil was actually the first one that bottomed. And now we are
Yeah.
seeing some dollar stabilization as well. So because of inflation expectations, this makes sense. And we will see where crude oil, if crude oil can break these levels here, this resistance, then I think that this could help dollar actually to stabilize if the inflation remains the main issue.
Okay. I want to ask you, I know you do this for in your work. Bitcoin, I was looking at it, for a melt up phase in the market, and Bitcoin's a sign of liquidity that we get a breakout over 69 and blow off towards six figures.
Yeah, I think that Bitcoin, I mean, we have seen a pretty nice recovery, interestingly, to this week, despite the
Yeah,
dollar trying to stabilize.
yeah.
So maybe this one is trying to move with metals and stocks, and I certainly think that sooner or later we will retest the highs there. But of course, this may take another 2 months or so before we may even start breaking out for real.
Okay. I kind of think like this melt up that we have going on in the S&Ps, and you were calling for a new high, and we got it. You've been really in the zone. Your counts have been in the zone. I'm not saying that's an exception, but you've really been in the zone. So we have wave 5. We have to subdivide wave 5 into 5 waves, and
Yeah.
where are you at on risk? Because could we end up with like an ending diagonal? I know that sometimes my 3 drives in Elliott terms are called ending diagonals.
Yeah, I mean it can be, but it's a bit too early to call this
Yeah,
an ending diagonal. But I certainly think that around 6,000 that will be a very massive level for the S&P 500. Very
yeah.
careful up there.
Look at the lack of momentum, Grega, on the weekly. So, I mean, we couldn't even get up to 70 on the RSI compared to the last peak we were here. So, I mean, there is definitely waning momentum into new highs.
Yeah. So
So,
we are in fifth.
yeah. Okay. Well, you're going to ring the bell for all of us here to buy puts at the top within
Yeah,
5 handles.
at 6,000.
Okay. All right. So, I know everyone's waiting for that number. And you know what that makes me think? It either doesn't get there or it melts through melts through it. But thanks for the walk around the board with us, Grega. Uh, you know, Grega's counts help a lot, whether or not you trade everything. And he is on the site. And Grega's very religious about keeping things updated. Okay. I mean, if anything changes, alternate counts, it's posted. So it's not like you have a stale 1 week old analysis when you go to, any of our guys that post. So you proved it again and again, Grega. That's why I call you the wizard. So let's go down to some of the what were they called? Lilliputians, like me. And Kay, are you convinced about US dollar yen? And, you know, if you've been following K-Man, you're doing pretty good being long metals.
Thanks, Dale. Hello, everybody. Yeah, I said it like yesterday or the day before already on, and I think on this show, that the yen could end up being the loser of this central bank fest, and it appears to be the case. And actually, UEDA did very well to send the yen a bit lower today, because and I posted it on as the meeting, the press conference ended. I posted it on our ForexAnalytix X page as well. He said a couple of things that could make the market understand that we are perhaps not even that far yet of their neutral rate, which is a bit surprising if you are in the middle or even just at the start of a rate hike cycle. Yeah, for the metals, gold is going again above 2,600. So what I said, I think the mid 26s, 26, 50, 60 is going to be levels that we need to monitor closely, I reckon. I do think that the market doesn't want to go short into the weekend because there's enough geopolitical risk. So there is a potential for it to go and have a test. I'll be happy.
Did you get the note from Blake that we should discard all our pagers and walkie-talkies?
I didn't get the note because I put my pager down in the atomic bunker. So
anyway, all right.
Yeah, and and silver is now trying to go as well. Silver is a funny one. It looks as if the silver market watches gold, waits for the confirmation, and then catches up. And that's now it's trying to go as well, trading at a high of the day. Yeah, both are still.
Silver outperformed this week. This was, you know, the gold-silver ratio. They tried to rally it on that after the Fed cut, and I don't know, we're on the verge of giving it up again.
Yeah.
So
yeah,
silver's the one in the melt up.
Well, if you and the market seems to buy it as well. If we buy the fact that the Fed is doing sort of what they can to support the market, silver should do very well, because who says support to the economy, and silver should indeed do very well. I think 32.5 is around
Almost
the corner on silver.
Yeah. Okay. So Blake, thoughts going into the end of the week here?
Well, I mean, I know you guys just covered precious metals, but man, this gold, I thought we'd hit 2,600, have a little bit more of a pullback, and it's just it ended up being like a speed bump. But overall, by the way, Macklem is speaking right now. Not sure if there's any. Says in the near term, adoption of artificial intelligence could add inflationary pressures. Yeah, nothing about anything. All right. But we do have
data coming up though, PPI and retail sales.
Yeah, we got retail sales, and that's gonna be the driver for the dollar CAD. You know, here we are going to the end of the week, and all I have to say is a couple of things. The stock market is at all-time highs, and we're holding above the breakout point. So that breakout point is still right there. It's in the blue line. There, you know, I can't tell you how many people have been like, oh, the stock market can't go higher. Do you see what's happening in the Middle East? You know, with the you know, it's intensifying, and you know about the pagers and you know possible retaliation strikes. The market doesn't care. And it doesn't care until it does. And right now it doesn't. And you can clearly see that. So whatever your take is on anything that's happening in the world and all of the negative and, you know, this and that and the other thing and higher deficits and however you want to spin your bearish narrative, stocks don't care. And until they show us that they care, try not to let that get in your head, because it's just going to really disable the way and hinder the way you're trading the markets, because you have to realize the markets are not the economy. And yes, eventually the markets will care about what's happening in the economy, or our twin deficits, or the war in Ukraine, what's happening in the Middle East. But right now, it just doesn't. And we're at all-time highs, and that is undeniable. And so, again, I just have to point out the S&P and where we're at. And, Greg is like, yeah, I'll ring the bell when we get to 5,600. That's the minimum requirement on this breakout. So as long as the breakout holds with the S&P, 6,000 is probably where we're going. I mean, yeah, we'll have some speed bumps along the way, like the 127% extension that's holding us today. And look, if we start getting below support, we start breaking back down, like especially below like 5,600, somewhere around here, 5,680 is the breakout point. 5,600 is right around here. Until we get below there, try not to get too wrapped up in the, oh my God, you see what's happening here, you see what's happening there. The market could give two shits less about that right now. And I can't stress that enough, because all I've heard since the FOMC is, oh my God, what's happening with stocks? They're breaking out, but they should be going lower. It's like, but they're not going lower. And that's I think the takeaway from today is you've got to just keep an open mind, and there's who said the old saying, is it Paul Tudor Jones that said, the market can stay irrational longer than you can stay solvent? Was it him that said that? Whose famous quote is that, Dale? You're a sponge for this type of information.
I don't know if that was Paul Tudor Jones.
I'm
not sure.
Whoever that was, the market may be irrational, but it can stay irrational. I can't tell you the amount of texts personally that I got yesterday about how stupid the market is. I'm like, is it? I don't know. Is it? It's bullish if you ask me. So that's those are personal texts, like to my phone.
The biggest moves at the end. This market wasn't going to die with a whimper. It was going to die with being spectacular. And, I read that after a 0.5 point cut, the average return on the market is about 12% in a year.
Yeah.
It's going to accomplish it by the end of this year. This is going to happen faster. I don't think there could be a lot of speed bumps between here and 6,000.
Well, I mean, I don't know. We have an election, but maybe that's the climbing the wall of worry is exactly what the market's going to do. Oh my God, we got an election. We're going higher.
Well, everyone's looking for an October crash. What if we get an October peak?
Yeah, right. Exactly. There we go. Yeah. Oh my God, it's seasonality. It's bad. Okay, great. So the market's going to go higher. One of the other things too is, and I have to point out, if you guys go to the ForexAnalytix chat room. Last night, last night, we were discussing, here's the chart and the dollar yen. And I posted, hey, down at 142 is going to be some really good support for the dollar yen. You'd think the channel support's going to be good. Down to 141.70, maybe really well supported post B.O.J. And the dollar yen basically hit 142 and bounced like a bat out of hell off of that chart, off of that support. So you got to keep an open mind here. There are so many. If you guys listen to macro podcasts, if you watch, I know a lot of you are knee deep, probably way too much than you should be, watching YouTube and all these macro people and telling you the carry trade's unwinding, the world's going to come to an end. I can't tell you the number of people that never talk about currencies that are just, oh, the yen's going to cause the next crash. I mean, that kind of bullshit is just, excuse my language, on a Friday. I'm a little heated this morning, but that type of stuff is just purely a great setup for when we saw the false breakdown this week, or the end of last week, or it is the beginning of this week, the false breakdown. I mean, it's like, yeah, that's going to lead us higher. And then the B.O.J, obviously K-Man and Ryan really did a great job this morning explaining why the yen's reversed, and then you got this move in yield. So, you know, the dollar yen, I think we can trade back up, like Grega says. We can trade back up to maybe the mid to high 140s before it rolls back over again. That's what I'm looking for. I'd love to trade the dollar yen to the short side. I don't think these are the right levels, but channel's holding it right now ahead of the weekend. And then obviously we have Canadian retail sales coming up here shortly to wrap up this very, very crazy week, which I'll just say the dollar CAD still isn't a bear flag pattern, but you know, what happens with the retail sales probably is going to be the mover here. Let's go around and you know, we got about 5 minutes before the data comes out. Let's start with Ryan. Ryan, I know it's Friday, but you know, we had stronger UK retail sales. The euro pound actually stopped out my long. I took a real cheeky little long around 84 pence and put a tight stop in. I got stopped out right during the retail sales and then popped right back up again. It's, you know, it was just a few pip loss, but you know, what are you thinking, you know, as we go into the end of the week? How are you gonna manage this mess that we've seen?
I'm probably going to manage it by not doing an awful lot because we're still in that situation. Now you're talking about dollar yen. It's just broken up through the highs that we've been sitting at all through September, and now it's back below. You know, between you talking and finishing and coming to me, we've been from 144.20. We're now trading 143.86. So, you know, you just can't think that a move's going to last for 5 minutes, particularly in this pair. It's still, you know, bonkers volatile. But yeah, otherwise, I'm still long euro dollar from 110. So I'm waiting to see. I think we're in a bit of a shit or get off the pot moment up at 112 here. You know, if we don't break it or at least put in a test pretty soon, then I think we're probably going to see a bit of a pullback because it keeps euro dollar in the range.
Yeah, how's it not going higher with gold just stopping out any short, you know, into the weekend? It's crazy, right?
It's because like we've been saying, all dollars are different this week.
Yeah.
You know, volatility there is dropping. We're sub 5.5% in the vols in that one, so that's a reason it's going slower. So yeah, you know, cable's looking like it wants to move on up. It needs to keep its gains. Aussie dollar still trying to get through this 20 zone, 68-20 zone. So I think where we close the week, that gives you a bit more structure to play with next week for some of these FX pairs. Like I said earlier, dollar CAD, it's spinning around in circles at the moment.
All right. Well, thank you for that input, and thanks, guys. It was Keynes. You guys all have access to Google while I'm talking, so good. Appreciate that. K-Man, what are you thinking going into this week with everything that you've seen? What are you going to do? What's on your radar?
Well, don't change a winning team on the metals. I think we also have those whatever witches dancing today, right? So it could be that the correlation algos take us a bit everywhere and anywhere in FX. I really think we're coming out of this whole central bank thing. I'm not going to change much to what I have now. I'm a little short euro sterling. The only thing I did was to get out of my Canadian positions because I'm not sure that Canada is still is a currency to have in the short term. But as I said on the Flow Show as well, and what Ryan just said, I think next week could be a very interesting week because there's not a lot of huge things on the calendar, but the big hitters will have digested the whole central bank thing and may start to shift books a little bit next week. So I think we have to gear up for next week because a quieter week doesn't mean we can't see any big moves, right? So
end of quarter, end of month kind of stuff.
Well, yeah, next week we probably prepare. The only one really to look out for next week as well. I mean, not the only one, but the major one. There's one little central bank remaining, which is SNB, and there's a lot of speculation going around whether they could do 50 BPs or not next week, which would be a huge move. So that is one to definitely keep an eye on it on as well for next week. But I think today, yeah, I wouldn't rule out. Well, I wouldn't rule out. I still think we are going to find dips on in the dollar yen and yen crosses being bought just to close the week, just because of what you said. And the rest, yeah, I mean, just yeah, they are just there and and spectators more or less. I don't.
Canadian retail sales. What? I'm sorry, came in. The data just came out and it was coming out, but I didn't want to interrupt you, but
It's
it
all
is
right.
out now. So
Little better,
PPI softer though.
little better and PPI softer. Make pick your poison.
okay. Hold on real quick. Let's take a look at the Canadian. I didn't want to interrupt you, but
6 pip lower.
okay. Yeah, it was heading lower ahead of the data. Canadian data is very leaky. In other words, if you follow the dollar Canadian, you tend to get the moves a couple of 5 to 10 minutes. Now, I'm not saying all you Canadians are corrupt, but I'm just saying that stuff leaks minutes before the data comes out, many a times. But anyway, the dollar Canadian is sliding down towards the 135.50 level. This is going to be pretty key channel support. Anyway, K-Man, go ahead. You had you can continue your thoughts now.
No,
We
no,
do
I
have a
was
guest.
kind of done, Blake. No, as I just said, I have. I mean, the only thing is, I just keep my positions running, and that's it. And managing them along the way. I'm going to be a happy take profit taker for the better part of my position in gold right now, around 26 and a half. I think though that with the geopolitics, the market will not want to be shortlisting before the weekend.
All right, Dale. I know you have your interview coming up, but real quick, didn't get a chance to ask Grega if he had any last minute thoughts before the weekend. Anyway, Dale, I'm sure you have some last minute thoughts before you take over with Zach. And did you want to get them talk a little bit about that before you you do your interview?
Yeah, I would love to see Grega be right and a dollar rally occur. I'm going to taking partials in Aussie from the 6.5 level up here, and we'll recommit if we get a breakout close. So,
all right. Well, thank you very much. And I want to say, everybody, it's been a hell of a week. I know I feel like I've been put through the ringer, and it's not been an easy week to trade.
no.
You know, I've talked to a lot of traders this week, and the whipsawing has been,
Yeah.
you know, some of the biggest whipsaw markets we've seen all year, and that's good. Volatility is good, but you have to be, you know, like Brian pointed out, you know, you got some gains, take them, you know, and move along. So that's the kind of market that we're in. And with that being said, I want to thank you all for being here. Make sure you take advantage of the 8-year anniversary sale prices that we have. Again, they're only good for like another week. You know, we don't do price discounts often, and most of you know that. And when they're gone, they're gone. So, you know, this is the best way to be involved in our chat room. You can have, you know, direct conversations with myself, Ryan, and K-Man all day long. Throughout the course of the day, and you know, lots of other traders too. So make sure that you jump in the ForexAnalytix chat room. You know, download the mobile app, get all this analysis and this toolkit for you as a trader. So you have the live squawk feed and, you know, risk management calculators and different types of analysis from Grega, Andre, and all of us and the like. So take advantage of that. Dale, thank you for guiding us all week. It's been a crazy hell of a week, but it's been a good week for volatility and a good week for traders. So thanks for always being our guiding light around here.
Oh, wow. Thank you, Blake. Great job again, team. Thank you, Ryan came in, Stelios, who's not here. And we did our best, laid it out on the court, and count on us doing it again. And F.A.C.E is a tip of the iceberg. So dive into the whole iceberg and hang out with our community. You'll get better. Zach Manis, what really great to have you back, Zach. You
Good
were
morning, Dale.
Yeah, you were spot on about that there would not be any kind of gentleman's break in the gold market to accommodate bulls. So,
We did get not in gold, but in miners we got a decent little
y-
pullback. It actually
yeah,
shifted kind of what I was looking for in terms of putting us a little bit further ahead on the timeline. Let me
okay.
see if I can share my screen and we'll talk about some stuff.
Are we getting close? You know, I noticed, and you know, I speak to some other Elliotticians that there are a lot of fives here. You know that the S&Ps are in five, and silver could be a five at 33. So a lot of completions. Even the dollar is in four, waiting for five. Is that theme coming
Um,
through in your work?
not as much. I mean, I certainly think that the equity market is very, very extended, but it's it tried a couple times to turn down and had
Well,
some
it's got
right.
6,100 in it, and we're in a melt-up phase where we get parabolic.
I think so. I want to
Yeah.
get to equities in a bit, but I want to talk about
Okay.
metals first. I'm a
Go ahead.
little bit more bullish. I mean, I'm bullish on both metals, but I like to keep an eye on this ratio chart of gold and silver.
Yeah.
And I think we're trying to turn down
Yeah.
from a couple of lower highs here for a B wave and for a wave two in a bigger retrace in the ratio. So I would really love to
I
see
agree.
us get closer to like into the 60s and then maybe even a 50 to 1 ratio for silver to outperform. And
Right.
as I think we've spoken about the ratio chart before, when from my perspective when I've been on with you, but it doesn't necessarily mean that gold is going to perform badly, just that silver should outpace whatever moves that the pair usually likes to do together. So we can
It's
talk about
another
the
ingredient of the spec phase we're in.
exactly. I mean, I think you're if as you're printing money, then people assets that people want to look to be a store of value are going to benefit from that those excess dollar bucks or whatever currency you guys are enjoying trading in and out of those days. But some of those hard assets are going to be, and even Bitcoin maybe as well, are going to benefit from that. So off of the June lows in gold and silver, well, silver actually counts the B wave in a different spot, but inside a larger three of a diagonal, looking for more of this C wave up. So I have gold likely heading towards the 2850 to 2900 region for the rest of that third wave. And then because it's a diagonal, I think this is probably a cleaner chart to look at in terms of the larger degree, even though it has the PSAR and iCloud. But because it's a diagonal, well, gotta push that up. This got adjusted for the back adjustment. I didn't move this guy up. Closer to 2850 to 2900. But because it's a diagonal, we should expect to see a larger drop than normal in that wave four. But it doesn't necessarily have to overlap with the top of wave one. That's something that Garrett and I have observed many, many times, that a fourth wave can be deeper in a diagonal than a traditional fourth of an impulse, but it doesn't have to overlap. It is allowed to. So that's kind of the picture that we're looking at on gold, continuing to probably chop up more because this is further along in an ending diagonal for the C wave itself, needing to, and also this smaller degree C wave of the third itself is behaving like a diagonal. So this can continue to chop and grind up towards the 2730s. That is going to need a decent retrace and then a move up towards that 2860. But while gold is doing that into the end of the year, maybe early next year, it does certainly seem like silver has potential to outstrip that by a pretty large margin. It filled out a wider B wave that came into the August low, and that's either counting an expanded flat, which implies that the upside pull is really strong to get this smaller degree corrective wave inside that minor degree B wave to head to a higher high, or you can just count a larger A there. Either way, it points us up towards the 40 region for silver in that same C of the parentheses wave 3 move. It's just running behind, but has kept up mostly with gold, but ready to in terms of all the starts and stops and ups and down moves, they tend to trade in tandem with each other, but by a different magnitude. And I think we're ready to see, the next pullback here technically this can still be an impulsive move off of the August low, where this was the white 1-2. See if I can grab that here. And we're in the third already. But the proportions of the subwaves, and we've talked about how we really like to look closely at fractals and at the smaller degree subwaves, to make sure that there's agreement all along the way. And it really looks like we're filling out 5 waves up here to a 100% extension, which is not what we should expect to see if this is a third wave that's heading up towards the 35-36 region inside our C wave. It looks more like this is this blue ABC for a larger circle wave 1, but making the C wave the same diagonal itself that we were looking at in gold, just a couple steps behind. But being a couple steps behind will allow this to catch up and outpace.
So there could be one more bus stop for people that do not have any silver exposure.
Yeah,
to get on board.
If there is Avi's a little bit more concerned about this alt yellow B wave, and that's where if you count this as the larger A as well, then it's possible that this is setting up for a wider flat instead of this being all of the consolidation. And that is a risk when you have only 3 waves up. Where
would a wider flat take you back to the lows?
Back towards the 26 region.
Okay.
But my thinking here is that, you have ABC up, so you are looking for a pullback. That if that pullback starts off as a sharper 5-wave move down into the 2980 to 2950 region, then you have to worry about a corrective bounce and then getting 3, 4, 5 down for that.
Always
C
something
wave
to worry about.
Right. But if it starts off corrective and is going to hold in the 29 region, then, if you see a nice clean ABC corrective retrace into the 29 region, that's your gentleman's entry. It might not be the smoothest, cleanest impulse move, because we know that since this is acting like a diagonal, then this third is going to be an ABC that looks like this. We'll make that blue so that we can color code things to match, and that the 4th wave is probably going to be a little bit deeper, even though it doesn't have to overlap with the top of that wave 1. But we're going to get to that target, and we're going to head probably closer to 40, and then after holding that larger 4th, then we can get up into probably close to the 50s for silver. So I like that a lot, and I think miners are going to benefit a lot from that as well. I needed to shift gears. I was looking for us to hold right here and get one more push up off of this August low, and that would have been a new 5 waves up and could have been another 1-2 of something even more strongly bullish. But this is still pretty bullish here, looking for a move up towards 47 to 50 region for the rest of this 3rd wave inside a larger third of a bigger, longer term move. But I think that this is turning into a slightly larger version of the same diagonal. The nice thing here between, so I use color coding a lot. Either way, we're looking for a 5th wave up towards the 47 to 50 region to complete this circle wave 3. So whether this is the 1-2 and we're in the A and the B inside the third of that, or whether we have a larger ABC up for that, a bigger wave 1, which would only push this a little bit further, maybe even closer to 51, 52, if we do fill out that bigger yellow wave 2 off of the recent high, which would fit very much in line with the silver chart. And there are a couple of bigger silver heavy names that do make it into some of the top holdings of GDX. So we can certainly see that. But, we also look at things like SILJ and that fits, the silver expectations, kind of crosses in between those, where, you know, this looks more like an A wave of this third, similar to what we're looking at on GDX, but not quite the further along, you know, but we could get the same. This could be this larger parentheses wave one and get a little bit more retraces wave two. But as long as we're holding, you know, September and August lows in most things in the miners realm, you know, the next pullback is a certainly a viable one if it's nicely corrected. So like metals and miners a lot. Yeah.
Yeah. Thank you.
Are
there any silver issues you like, or you don't like to mention names?
No, I mean, some of the usual suspects, wheat and precious metals, you know, fits that same structure very, very well. You know, on one hand, there are some things that we like to look at in small quantities that have potential to significantly outperform. But at the same time, we also like to look for charts that are reliably in agreement with what we see in the indexes and in the metals themselves. And so something like Wheaton with the same ending diagonal structure for the same degree fifth wave of the wave three, you know, gives us a lot more confidence in tracking that in other things because, you know, it looks so good there. But you know, stuff like Pan American has different looking structure. There is the risk, a little bit more risk here because we held above 50% for this B wave, that this three wave structure up, even though ideally it's the same wave one that we're looking at in silver of this bigger diagonal for a C wave heading up towards the 35 to 40 region. There is the risk that this is a parentheses yellow B and it's going to fill out a wider flat. If it does pop higher, which it really should pop closer to 23 for a fifth wave of that blue C, then there's a better chance that even if it is a yellow parentheses B wave of this wider flat for the yellow, that it holds around the 17 region. But, you know, looking for this higher low, you know, as a good opportunity to add and maintaining some exposure currently, as long as it's above, you know, 18 region, is not a bad approach. So those are just a couple of individual silver names that we really like. Also like copper stuff a lot. Copper with a pretty similar looking setup that it's trying to fill out, ideally getting higher in this ABC up for the bigger wave one. Could also be a leading diagonal for this wave one, but looking for this bigger swing wave move as a C wave of wave three, counting it as a slightly smaller degree, but pretty much the same magnitude move here for that third, looking at FCX as opposed to copper itself. FCX and a couple other names more clearly look like it's just the AB of the wave three. Copper itself got higher in this move relative to FCX and some other things. So technically it can count as all of the three, and this is the four. So less clearly bullish in terms of a bigger swing move, but we like Freeport a lot. We just recently wrote a public article on that. So and I like the way that it lines up with somewhat what we see in silver. Also aluminum.
Will Russell lead the way as the most spec index in equity? It's a whole theme of you know,
I like the NASDAQ more. If you want to shift over to equities, I think the NASDAQ had more clarity in terms of a possible setup for a short recently. But now, once it was more very clearly at three waves up to a higher low, to a lower high into August. So had three waves down. So that was a good opportunity to buy this pullback for a move up. It was at least targeting somewhere around the 19,500 resistance region as the minimum target for a corrective ABC up as something bearish. And got an extension of that, but still held at between a 618 and a 764 retrace and had the potential to start something more bearish. This initial move down was only three waves, so that was another opportunity to play for a bounce that, even if it was a corrective bounce, was at least heading back up towards the 19,600 region from Monday's lows. And there are a couple of things that I went long in a bigger way, even though I was leaning more bearish. I was scalping long that bounce in addition to the individual names that we were long in stock waves. And we were holding a 3-wave bounce into resistance into the Fed and tried a few times to turn down from that. And that was, I posted on Twitter the other day
It
that
was
this
a
night,
beach ball.
well, just that this 19,800 region was kind of the back against the wall,
Yeah.
like last level for anything immediately bearish. And once we crossed over that, that gave us 5 waves up off of this higher low. So now you have to look for that next extension target. And you can say like,
Okay.
everything's super extended and overdue and the risk skew is terrible. And so that just makes us very, very selective of the things that we like to the long side. But if we're holding the 19,000s as a corrective retrace from
Looking
here,
for 23, right?
yeah, 23,000 seems pretty doable.
Okay, now
And
that would complete wave 3. How deep would a correction be should this wave count play out from 3?
so from the keep in mind this is the futures for the Nasdaq. When you look at it on the QQQs or the Nasdaq cash,
Yeah.
there's a little bit of a difference there. My continuous back adjusted forces this low from 2008 to a lower low, but in the cash and in QQQs, that's a higher low that counts as the cycle wave 1 and wave 2 in that low off of the 2002 low. So proportionately, the cycle degree wave 4, normal support, I have to move this up from the back adjustment, normal fib support should probably put it in the region of the 2022 to maybe crossing into some of this correction from the COVID crash.
Okay.
So that would be
That's
the
huge.
most normal support for that degree 4th wave.
So things become quite vulnerable after reaching targets here.
Right. And
and
because of that risk skew, I'm not pedal to the metal with my entire portfolio to chase this next move higher. But there are some things that we do like a lot. We're very, very bullish on Tesla. Where's my
You like
yeah,
natural gas stocks? I think you liked them last time we talked. You
I like
liked oil.
I like
Any-
oil and energy. I'm not a big
Yeah.
fan of the natural gas chart itself, although
Right.
RRC and Swan and AR are all great looking stocks, as far as some of those individual natural gas names. But Tesla, I think has potential to definitely be a bastion of safety. If the it should perform really well with the Nasdaq on this next swing up. And for that, targeting 353 to 414 region for the rest of the C wave, and then it'll get a consolidation from that. But then I think that on the next bounce from that consolidation, Tesla starts to outperform, and then the Nasdaq could start to roll over, and Tesla gets all of the cash and runs pretty
Interesting.
hard towards 1,000 to even 1,400 would be great.
Okay.
But yeah, we like energy stocks a lot.
Okay. All right. So great to talk to you during the melt up, and we'll be talking to you, I believe, post melt up in December, right, Zach?
Yeah,
No?
I hope so. Yeah, that sounds
It's going
good.
to be a different world by the time we talk again
Well,
on many levels, don't you think?
I do. I even have a note on my Nasdaq. I don't know if you saw that. Oh, I have to go to the continuous chart.
What?
That it just so happens that the timing for
Yeah.
the rest of the C wave can put us right into early November.
Yeah. Held
Um,
everything together right until after the election.
Right.
Yeah. Okay. Classic. It was so obvious I didn't believe it, but it's certainly, my sister was right. I said that, everyone was, oh, I'll be okay. I'll get out, either right before or after the election. I go, it can't be that pat.
I mean, I joke. I mean,
It was.
initially I was joking about it, but like when you know everyone talks about beans, bullets, and beer and bullion and stuff in a
Yeah,
bunker when things turn bad, but some of those charts are actually looking really favorable right now.
yeah,
Not just
yeah,
on like the 6 hour. This is Bud for Anheuser-Busch. Really nice 1-2-1-2 setup.
yeah.
And another working on another smaller degree wave one and wave two now off the more recent July low. So definitely good potential for this to head from the 60s into the 80s and 90 region over the next year or so. Beans are also trying to form a pretty nice bottom for a possible cycle degree wave
Yeah,
five
I
up.
like the wheat too. I like all the grains here.
Right. Well,
Yeah.
this I'm talking about Hormel like canned beans.
Okay, well, all right. I'm
Um,
talking soybeans, but
and Smith
yeah.
and Wesson also in terms
Oh
of
yeah.
trying to put in a large degree
Look at you.
bottom for bullish count. So
It's a
you got
prepper
gold.
portfolio. Prepper
Exactly.
portfolio. You ought to put
Um,
that together. People would love that.
we I think we wrote one article on it,
Yeah.
and are working on a couple others, but and cigarettes too. Cigarettes have some nice bullish potential as well.
Yeah, everyone's
Would
going to
like to
be
see
nervous. Yeah.
more of this pullback for a wave two into the mid 40s would be great. Could be
Yeah.
pretty close to done with this A wave already. So due for a nice little bounce, and then more consolidation would make that more reliable. But
Okay.
anywhere in the 48 to 44 region, I think is a great opportunity to jump on some Mo.
You did it again, Zach.
Thank you, Dale.
So a bunch of great looks. I hope that people hung out and watch a video. Some excellent counts to consider. Best way for people to follow you, Zach, and read your work, keep up with you.
So I post a good amount of stuff on Twitter when I have time during the day, but most of my days I'm at ElliottWaveTrader.net in either the stock waves or the metals mining and agriculture service.
I have to say that they have a very strong team, and it takes a strong team to recognize one. So really appreciate you coming here and sharing your hard work, Zach. I know you put hours into this. It's not something that you have a program and it pops up all these things that you're a thinker.
Thank you very
So
much, Dale.
yeah, so follow Zach on X at Zach Manis and go check out their stuff and be prepped. After the election, be ready. Zach,
Right. Have
when
a
will we
great
know
rest of your
that?
day.
When will we
Oh,
know we have a president? How many weeks after the election?
there's some great YouTube videos talking about speculating on a lot of stuff like that. I'm not really sure. I'm an expert to talk on
All
election
right,
results.
all right, yeah, yeah. So anyway, it's going to
It's going to be
be
exciting.
okay. Zach likes it. It's exciting. I would prefer no drama, but forget that in this world. So
Exactly.
yeah. All right, buddy. My trading warrior brother, Zach Manis, check him out. He's a pro and works hard at his craft.
Thank you very
Thank you,
much,
buddy.
Dale. Have a great day. Bye-bye.
All right. And everyone else, have a great weekend. Don't just count your pips, count your blessings. Recharge over the weekend. I know I will. And you're very welcome. Don't forget to sign up. Get in that community because F.A.C.E is over now. You could be rolling right into the room. Adios.